Hello, everyone. So today I'm going to be talking about part two on how to use my strategy in the Forex market. All right. So the first one, if you could remember, I was teaching you how to use my strategy as confirmation for entry. But now I'm going to be teaching you how to enter aggressively in the market once you've seen all the signs. And I'm going to also show you why I trust my Quasimodo. I was taught by my mentor and teacher. I didn't even know the name of the strategy was Quasimodo or Heads and Shoulders. I just knew that, okay, if I see this, I see that, this is where I enter. But right now, I'm going to break it down to you. I need you to come with your note and notepad and your pen. Let's go to the charts. Thank you. All right. So this is the first, this is BTC, by the way, but I want you to pay attention to what I'm going to show you. Please follow me. Follow me. All right. You know, on a normal day, this is how an uptrend looks like. Yes. But then when it comes to the strategy, this is what it looks like for me. Because remember, it's the head and shoulders. And before the heads of shoulders, or after or whenever, I want to see liquidity cleared before my entry. Now, if I pick my Quasimodo or my heads and shoulders, this is your head and shoulder. All right. This is your head. And then I want to see it come back right there. All right. To continue this trend. Now, a lot of people would not understand that this is what the kind of thing you should be looking for. But I'm going to make it clear and simple. Now, on an uptrend, you know you want to buy. And where do you want to buy? We want to buy at the right shoulder. That's the same level, the Quasimodo level, the same level as the left shoulder. Or if we can't, I like to use my fib. I want to buy at the Beningin zone, which is also the 7888 of my fib zone. I've explained it in one of the classes before. Okay, so this is what happens. This is structure, y'all. So when you're seeing an uptrend, now in that uptrend, before the next break of structure, I want to see my extended W. I want to see my left shoulder and my head, because what you're going to be seeing is an inverted heads and shoulder. You want to be seeing an upside down Quasimodo. That's what I want to be seeing before I can enter for my buy. Now, I want to see the left shoulder formed before the break of structure. And now when I'm steady seeing a break of structure, for my entry, I will be seeing liquidity. Now, you see this place we call the extended W, as I explained before. Now, you know, before you see an extended W means that liquidity has been swept below, liquidity has been broken above. All right. Now, that's liquidity right there. Liquidity has been swept below, liquidity has been swept above before break of structure. Now, this is typical extended W, and this is what I look for. Once I see that, I'm waiting for the market to come back here for me to enter. Okay, it also matches with those that trade the trend line. Now you can see this is a trend, a pure trend, and you can see each entry is on the trend. But let's not go into trend right now. Now, once I see my break of structure, I see liquidity being swept. My next entry will be there. Therefore, it has what created an extended W. And I need you to open up your mind. You have to offload. You're going to watch this video again and again. Once you can understand this structure, trust me, you will hardly lose a trade. Of course, everybody hits SL because nobody owns the market. But if you wait for this setup, it plays true and true in the charts, and I'm going to be showing you. All right, let's take it easy now. Now, you will be seeing this on a higher time frame. Probably you're seeing this on a daily time frame, and you're seeing this on a 2-hour time frame. All right, what you'll be seeing is just an uptrend. But what you'll be seeing in a smaller time frame is, okay, before the uptrend, you will see either a demand zone being formed, or you would see an extended W. I'm going to get into details later. But I'll need you to put a comment after this, after watching this video. In the comment section, I need you to ask your questions and I'm going to be answering. Now, you see this, the left, the left shoulder of the extended or the upside down heads and shoulder. That is the first liquidity that will be swept before the next entry. Okay, let's use this one. Now, this is another extended W. All right. That is the liquidity. That will be part of the liquidity that will be swept before your entry. So this is your entry for a buy right here. Right here. This is your entry for the buy right here. All right. At least to this next high, to sweep the next liquidity to give us the next high. Now that is your entry. What have you seen? You have seen what? An extended W, all right, which represents an upside down heads and shoulder. What part of the shoulder? You are seeing what? You are seeing a left shoulder, you are seeing a head, and you want it to come back down to the same level as the left shoulder, and your right shoulder will be your entry. But before then, what are you seeing? Liquidity being swept. That liquidity being swept is also the left shoulder of the next entry. Stick with me. That shoulder is the left shoulder for the next entry. Now look at that. This is your liquidity. Liquidity being swept gave you this entry that matched with this left shoulder, and you took it all the way up. Now your next entry, you are waiting on the same level as this shoulder, all right? And guess what? Liquidity being formed again. And what did it do? It came, swept that liquidity accordingly, tapped into the same level as the left shoulder to give you the right shoulder for your entry. So this also is your next entry to the next high. Now, once you can master this, you're good. Same with, I'm going to take you to the chart, but same with the sell or the downtrend. Let me take you there. Now, what you're seeing normally on a high time frame, let's say the daily time frame, is what? Lower lows, lower high, break of structure, low, break of structure to the low. Now, this is what is really happening in your 4 hour, your 1 hour, your 2 hours. This is what you're looking for as a Quasimodo trader. You want to see that before a break of structure is an extended W or an extended M, because we are selling now. This is your extended M right here. All right. Now, with this being formed, you see your break of structure. All right. Now, you want to see liquidity being formed at B, and then liquidity swept to come and tap on the right on the level of the left shoulder to give you your next entry right there. Now, if I pick because remember, in a sell trend, what you're seeing is an upright Quasimodo, an upright heads and shoulders. And I'm just going to be drawing it for you right here. Your left shoulder, your head, all right, and your right shoulder right there. Now, what happened before the right shoulder? Liquidity was swept. Now, that liquidity being swept is going to serve as your next left shoulder. Why? Your left shoulder, your head, and your right shoulder. So you can see, now this is another one. Liquidity being swept. That will also serve as your next left shoulder. All right? There you go. Your next left shoulder, your head. After the break of structure, I'm waiting for an entry right here. Now, if you look closely, for those that even trade trend lines, your trend is sure. You're seeing your trend happening. All right? So I'm just going to remove all this so we don't get confused, but you get the point. You get the point. Now, I need you to watch this video again and again. You don't just watch it and just like, no. Watch and practice. Now let's go to the chart. We are going to be looking for examples. Now I am waiting for a particular entry on BTC. It's been taking all my time. Now BTC was going up, going up, going up. Now what did I happen? This is even the 4-hour time frame. What did I happen to see? I happened to see what? A break of structure coming down. I've seen a break of structure here. All right. I've seen a break of structure here. I'm just going to label it. All right. I've seen a major break of structure on this side. All right. I've seen a major break of structure. This is a week. I don't want to put much attention to it, but this was the next high and this took it to the next high. So I don't want to, hold on. Let me just, I don't know. I don't want to confuse you guys, but let me see if I can find, let's go to gold. I think I have something on gold so that we can, let's see gold. Yeah. Now for gold, I am looking for a buy on the 1 hour. I'm looking for the buy on the 1 hour. I mean on the 4 hour. Now, if you can clearly see, that is a break of structure to the upside. That is a break of structure to the upside. Okay. All right. Break of structure to the upside. Break of structure to the upside. But it clearly seems like I'm looking for a perfect example. Okay, a break of structure to the upside, a break of structure to the upside. Now clearly looks like market has changed structure from this zone. All right. Now we're looking for sales. Okay, we're looking for sales. However, I want to see the market come up to this zone for the next sell. That will happen. All right. I want to see the market come up to this zone for the next sell. That will happen. And render all these plays as well. Liquidity. All right. Now, what is my plan? My plan is, this is what? An extended M. All right. What is the extended M? Now, where am I waiting for my next entry? I'm waiting for my next entry here. All right. For it to come down. Okay. That's what I'm waiting for. Now, you know what? I'm trying to catch a counter trend. I want to catch a buy to where I'm going to sell. That's why I have this setup showing. But I guess I will delete it and I will show you. Now, this is a trend, an uptrend. You can clearly see break of structure here. Right? Break of structure there. All right. Now, this is an uptrend that has obviously gotten or has turned toward a downtrend. Why? There's a major break of structure here. Okay, just stick with me. Now we're looking at this and we're like, oh, the market has changed, but there's something missing. As a Quasimodo trader, this is where I'm waiting for my next entry. This zone is where I'm waiting for my next entry for the next sell. Right? That's where I'm waiting for. Now, this was your break of structure here, a break of structure here, or will I call it a sweep of liquidity? There. Let's call it sweep of liquidity because that is where our extended M is. So it sweeps that liquidity and gives us the head. So what we are seeing here is we are seeing the left shoulder. All right. We are seeing the left shoulder. We are seeing the head. Now, what do we want to see? We've seen our break of structure to the downside. I want to see the market come up here and sell. This is typical. This is what I am waiting for. But I'm trying to also catch the counter trend. I want to catch the sell, the buy for the sell. But let's stick to what I'm trying to teach you. Now, this is my setup. Nothing will make me want to miss this setup. Now, see what I've been showing you. This is that extended M that is showing you your what? Your upright left shoulder and head. And what are you waiting for? I'm waiting for this next zone. Now I need you to also see something. Now before that zone, it gets to that zone, what would have happened? What would have happened before that next zone? Of course, you got it right. Swept, it would have swept what? Liquidity. All this from here to here like this. They are what? Liquidity. Right? Do you see that? Now, when the market comes back, gradually comes back as we are expecting, because I want to see the market come back to this zone. All right. Of course, it's going to buy to that zone, then come and give us another. So this is what we're waiting for right here. All right. For the next sell over here to sweep all that liquidity and possibly give us a new low. So I'm just going to take it up to this zone, and this is my, of course, the SL will be above the head. All right. And this is my what? This is my trade idea for gold, just like that. This is the right one. But because we are traders now, we want to catch the next move, because this is the high time frame. This is the 4-hour time frame. So I'll come down to lower time frame to see if I can get something at least before it hits. But trust me, it's always better to wait for your setup. This is the next setup for the next sell. All right, this is the setup for the next sell. Now, if I'm saying, okay, I want to wait till it comes up to this zone, after sweeping this liquidity, let it come up to this zone. All right, it's possible. It doesn't have to be always the same level. Sometimes it wants to clear all that liquidity and come and tap into a demand zone and drop. All right, I mean a supply zone and drop, or an order block and drop. All right, so this is what you want to be seeing. Now the problem is, because it's on a high time frame, everybody's looking for a quick buck. Everybody's looking for, the truth is, that is why we keep hitting SLs, because patience is one of the things we need to learn. Now this is a typical example of what to find of how to look for a trade idea using what I just taught you. Once it gets into this zone, I'm in with a small lot size, and if it moves, then I enter with a more comfortable or confident lot size. Why? Because this SL is kind of big, so I want to see it, then I can utilize my confirmation. Now for confirmation, all I want to see is a mini heads and shoulder here. I want to see it move like this, give me what? A mini heads and shoulder, and I'm in. Nothing will make me not take this trade on a lower time frame, which is what I taught you in the last class. This is a mini heads and shoulders. And if you don't believe me, you see, left, head, shoulder, and I'm in. Now enter with more confidence using my confirmation. All right. I hope this is clear. Now let me see if I can find an example of this that happened on another, let's say, let me see for a very good example. A very, very good example. Let's see for the buys. Let's see how we caught some buys. All right. How did we catch some buys? Okay. How did we catch some buys? I think I'm seeing a very, very good one. Seeing a very, very good one. This is pure heads and shoulders as well. But you have to be, this is for advanced students. I mean, you can't really understand it. If you don't know it, you don't know it. So that's another heads and shoulders. All right, but I'm looking for a good entry. All right, or a good example that already happened. All right, I see something here. Now look at this one. What do you see? This was a break of structure that happened here to the upside. Yeah. And what do I see? I'm seeing what? I'm seeing an extended W here. Now, what is my next point? I want to wait for the market to come down to this zone. I would have missed this trade, but that's fine. I want to see it come back to that zone where there is what? It did. It came back to the zone. There you go. And look at that. The market kept going. Now let's imagine this never happened. All right. But what am I seeing? I've seen a break of structure to the upside. I label it. All right. I've seen an extended W happen here. All right. I've seen that happen. I can just leave it like this so that everybody can see. This is my extended W. What happened? Liquidity has been swept below and swept what? Above. All right. And swept above, and it kept moving. Okay. So where is the liquidity that was swept below? This was the liquidity swept below right here. And it came down. Now I'm just going to delete this so you can see liquidity was swept below and liquidity swept above. Giving you your extended W. Now, what happened after that? All right, what happened after that? Market kept going up. Now, if market kept going up, I don't care. Let it do what it wants. I've seen that because of this, I got a new break of structure. Now, what am I going to be doing? I'm going to be waiting at this zone. Now, what are you seeing? You have already seen some good liquidity here. All right. Now, let's see. This will be my entry for that war, for that buy. Long position around this zone for that buy. Below this zone, this will be protected, and I want to see my money at least to this next zone. All right, so we're going to just play it so that you will see that this thing really works. Today is a Saturday, so I can't really give you a live trade. BTC is moving funny, so I'm just going to play. So let's see it work out. All right, this is a bit faster than that. So you can see it happen live, even though it's no longer live. So this is already our liquidity here. Look at another one. It's still, this is the closest one to that W, so it cannot be. All right. Look, that was our entry, and voila. That was our entry. You can clearly see the market still running up. Came back to entry. See, you see this coming back to entry is everybody's nightmare in this industry, coming back to entry. But once you're sure of what you're doing, you'll no longer be scared. All right, you'll no longer be scared. And there you go. You see the market respecting that zone. All right, respecting that zone. Respecting that zone. Nicely too. Let's see if it will give us up to this place to give us the next high. And bam, that is our trade idea. It happened right in front of you guys. All right. So that's how you know. That's how you know. I already paused it. I don't know why it keeps going. Oh my God. I'm just going to exit it. All right. So that's a typical example on how to use this strategy. So ask me more questions in the comment section. Go back and watch how to use it for confirmatory entry. And I can't wait to see you guys again. Love you. Bye, guys.